Good morning and welcome to Business Morning. I'm Chimeze Obi Iwagu. Starting off on the global oil market as prices fell as optimism for a straightforward recovery in fuel demand faded and a looming increase in supply weighed on the market, with Libya State Oil Company flagging progress on talks to resume exports. U.S. West Texas Intermediate crude futures fell as much as 44 cents but recovered slightly after stronger than expected Chinese factory data. In early trade, they were down 26 cents at $39.44 a barrel, having jumped 3% on Monday. Brent crude futures for September fell 17 cents to $41.68 a barrel, powering Monday's 92 cents gain. The less active August contract, which expires today, fell 25 cents after gaining 69 cents on Monday. Optimism on Monday has been based on strong growth in U.S. pending home sales, bolstering belief that global fuel demand is rising steadily as major economies reopen after coronavirus lockdown. But at the same time, coronavirus cases continue to rise in southern and southwestern U.S. states. Bulls will be looking for more signs of a demand recovery in data due today from the American Petroleum Institute Industry Group and from the U.S. government on Wednesday. Now, on the supply side, investors are watching to see whether Libya, which can produce about 1% of global oil supply, is able to resume exports blockaded since January amid a civil war. Libya's National Oil Corporation, NOC, said on Monday it was making progress on talks with neighboring countries to lift the blockade. In the meantime, President Muhammadu Buhari will today inaugurate the construction of the 614-kilometer-long Ajaokuta-Kaduna-Kano pipeline project, which is the single largest gas pipeline project in Nigeria's history today. The $2.8 billion natural gas pipeline project is a joint venture project between OilServe Limited, an indigenous oil and gas pipeline and facilities company, and the Nigerian National Petroleum Corporation, which forms the first phase of the Trans-Nigeria Gas Pipeline Project, which is part of the 4,401-kilometer-long Trans-Saharan Gas Pipeline. OilServe, which is leading the execution of the project, says it is 100% ready to execute the contract, which will boost the country's gas distribution by establishing a connecting pipeline network between the eastern, western, and northern regions of Nigeria with its pool of highly qualified and experienced engineers. The company adds that it will be responsible for the engineering, procurement, and construction of segment 1 of 40-inch diameter pipeline and has already started setup on site for the landmark event. While the impact COVID-19 is having on global supply chains and on global trade, and the immense economic pressure this is placing on Africa, not least in the availability of medical equipment, but also food and other goods, signals the importance of industrializing the continent. Trade unions in Africa, in collaboration with African governments, have been asked to intensify the campaigns for sustainable industrial policies for the continent to mitigate the negative impact of COVID-19 on jobs and investment. This call was made by the Vice President, Industrial Global Union, Mr. Issa Aremu, and he joins us now on the show. Good morning, Mr. Aremu. Thank you for joining us.
Yeah, good morning, Chimeze.
Well, Nigeria and indeed Africa have always talked about industrialization. Let me start by asking you where we are in terms of industrialization. Where does Nigeria rank amongst industrialized countries in Africa?
Yeah, well, thank you so much. I think it is clear that in terms of manufacturing value added, Nigeria has sharply declined in recent times. Manufacturing value added in Nigeria is just about 4%, compared to South Africa, about 25%. Even smaller countries like Mauritius, the value addition in terms of industrialization, far more higher, around about 22%. And that's quite a very significant drop because in the 70s, in the 80s, if we have to be historical, Nigeria used to be, a promising industrializing country. in the continent. I was also looking at the numbers. Even the value addition in Ghana has somewhat surpassed Nigeria, close to about 5 to 6%. So the challenge we have now is that with the impact of COVID, with the lockdown, some of the factories that have been producing, before the Bureau of Statistics have given us enough statistics to show that capacity utilization has been very low, especially Q4, the last quarter of 2019. On the average capacity utilization was about 45 to 50%. Now with the lockdown imposed by the challenge of managing COVID-19, I think there has been a remarkable setback in terms of industrialization in Nigeria in particular. But we're not here to just be doing analysis. I think the bottom line is that how do we reindustrialize the country? And in fact, reindustrialize the continent, because that's the way to go. Chimeze, you will agree with me that where the entire supply chains have collapsed now worldwide. There have been massive disruptions. China used to be the industrial power of the house, in which anything you want to import, you get it from China. They manufacture goods, whether it's electronics, of course, Japan in terms of automobiles, and to some extent South Africa. Now there has been disruption in that supply chain. I think it is now time for us to look inward. In Nigeria in particular, we must learn to produce what we consume. And I'm happy that well before the COVID-19, there has been some remarkable new thinking, to bring about sustainable industrial policies. There have been strategic intervention in some separate sectors, like textile. We used to have cotton and textile garment policy, which has been put in place by President Muhammadu Buhari. Rather than exporting cotton, we need to gin them, weave them, and possibly revive the existing textile factories. There has been an initiative on automobile, or there used to be automotive policy. You know that in the 70s, 80s, we had remarkable automobile companies in this country. We had Peugeot in Kaduna, we have Anamco in Anambra State, we had Volkswagen. All of them closed down, but there has been new initiative to bring them about. So I want to say now that I think we should move on to make sure that manufacturing value added, goes up. And the only way to do so is to revive the existing industry that were closed down. And in fact, in the 80s, we were ahead of most countries in Africa, almost 25% manufacturing value added we have in this country. So we've done it before, and I think it can be done. I think what we need to now discuss about, how do we get it done? First, we need the policy. And I've told you there are sectoral policy with respect to textile, there is respect to automobile, and then with the COVID dynamics now, everybody now knows that even the health products, what do they call it, the personal protective equipment, we need to produce them at home. There has been new initiative by CBN of Nigeria to, stimulus to ensure pharmaceutical industries come back on stream. We should be able to produce sanitizer, produce face masks. In any case, you can't even get them imported now because most countries also need them. So this is the time to look inward. Now, how do we get it done? I think we need a policy. Then secondly, you can't drive industrialization, Chimeze, without electrification. I think we must address the issue of uninterrupted power supply. That's energy was very critical in the shutdown that we have in manufacturing activities in this country. You need to buy generators for you to file your, to run your industries. The kind of money that people tie down in buying generators is not to set up new factories. So when I heard from your new segment that the president will be having a remarkable launch of this gas pipeline, this is also part of the energy. I think today, that's also remarkable, because to have that pool of gas pipeline that will be able to supply gas to most of our industries in the northern part of the country is already being done to the south.
Well, Mr. Remu,
Atlantic gas pipeline, it will go a long way to reduce cost of production and re-engineer industrialization.
Mr. Remy, yes, if I would come in there. Yeah, you talked about the fact that, well, the government, of course, is putting up some policies that, of course, they need to now work on to ensure that we achieve this industrialization. But we know that the major challenge we have here in Nigeria is about policy inconsistency. I remember under the administration of President Goodluck Jonathan, we used to have what they called the Industrial Revolution plan. Where is that plan now? How serious is the government towards industrializing the nation? I mean, is it that the plan was thrown away and then something else came up?
Well, I think the United Nations Industrial Organization, which is UNIDO, is the agency that is of United Nations that is supposed to promote industrialization worldwide. The UNIDO office has been doing very remarkable job in Nigeria. And I think UNIDO has emphasized that point you raised, that we have serious problem of policy inconsistency, not only that, policy non-implementation. You mentioned the National Industrialization Plan, a very robust plan, which in fact about 10 sectors were identified, for us to engage in value addition, automobile, textile, food and beverages, pharmaceuticals, well before the COVID, but this policy has been gathering dust. Don't also forget that this current administration came out with the Economic Recovery Growth Plan. I think that plan also consolidated on the previous plan that had been in place. In fact, the one I can remember, the EPG, the Economic Recovery Growth Plan, which is now already moribund because a new one is being put in place, emphasized that by 2018, we should be able to build self-reliance in terms of a refinery in this country for crude oil. I mean, our refineries are supposed to come on board. Don't forget that up to now, we're still importing wholesale petroleum products. We export crude oil, and then only for us to be importing the finished product. Our refineries are not working the way they should work. So I agree with you that we need to match policy formulation with policy implementation. Not only that, it has to be seen to be really consistent, and I think it's time for us to get cracking. But the one I can talk on very well is the one that I have been participating with, which is the cotton and textile garment policy. Now it's been consolidated. And I think we've moved on to the implementation because Central Bank of Nigeria through intervention has made sure that we empower the cotton farmers so that we can be able to grow cotton. And today we have moved from cotton shortages to now surplus. Don't forget that you need raw materials to drive a manufacturing textile industry. Now the challenge is to the entire value chain of weaving, spinning, and again, CBN has been trying as much as possible to bring all the stakeholders together. Then you need to make sure you protect your market. There is a problem of smuggling in this country. It's a serious one. I mean, you put the policy in place, factories also produce, but they discover that the market share is dominated by smuggled goods. And the problem with smuggled goods is that they don't pay duties to government. They can undersell locally produced products. So we also need to have consistent policy to tame smuggling into the country. Then, of course, there is a problem of standard. Don't also forget that consumers also need to make sure they get quality products. So Nigeria Standard Organization have to be in place. So it's an entire combination of both the fiscal policies as well as monetary policies to really make sure that we revive manufacturing as the way to go. Because we don't have any choice now. First, foreign exchange has collapsed. I mean, you know very well the review of the budget now. We don't even have enough foreign exchange. Our crude oil, because of the COVID, nobody wants to buy. So even the foreign exchange for us to import will not be there. So this is where I'm quite happy that the Central Bank of Nigeria, even well before the COVID, came out with that basket of products, I think 41 items, if I can recollect, in which Central Bank is saying that these are the products that we can produce locally. We need to import substitute, produce them locally. And the CBN will not make official scarce foreign exchange available for whoever to import this, when we can produce them locally. I think this is what
All
I
right.
expect.
Okay, Mr.
Effort
Remu.
on the part of trade and investment.
Yeah, Mr. Remu.
To get.
Mr. Remu, what's your assessment of skills availability to support industrialization?
Assessment of what?
Skills availability, skills to support industrialization.
Oh, yeah, it's that's why it's for us to really reindustrialize because we industrialized before. I think we need all the agencies to work together. First, the monetary policy, it has to be clear that those who are producing should be able to have stability, stable foreign exchange rate so that if they want to procure some machinery, they need to get the resources. Then secondly, of course, interest rate has to be attractive. And that's I'm happy that the last MPC meeting, CBN is also thinking of reduction of interest rate. That's the way to go because the cost of funding is very high. But after doing this, you need the human resources to drive the industry, as you said. That's why Ministry of Labour has to come in. We need to retool, we need to reskill, and the Industrial Training Fund has to be seen to return back to duty. It used to be a big fund in the 70s, 80s when Nigeria was industrializing. Industrial Training Fund used to make resources available to industries so that they can train their workers to retool them. As we are talking about, even automobile factories can come back unless you train new set of workers who have the skills to cope. Because the world has also moved from the first industrial revolution down to fourth industrial one, which is digital. So we need new skills, new hands, and this is why we need to do proper training of our workforce. But I want to say that the only way to have sustainable jobs is through industrialization. Our federal government has just announced the new policy of public works, 1,000 jobs in 774 local governments for 3 months to do public work. That is good to address unemployment crisis, but
but how sustainable is that? Is that sustainable?
Yeah, that's what I'm saying. It's not sustainable that first there is already decline in budget. In our budget, you are engaging budget cuts. How do you are going to sustain to pay people? And if you pay them for 3 months, what happens after that? I think the key to sustainable job is to get the industries back to work. There used to be a Nigeria in which manufacturers used to call on trade unions to bring more workers to come and work.
Mr. Remu, we really don't have much time here, but just before I let you go, are there countries, let's talk about African countries, other African countries we can actually learn from, Nigeria can actually learn from when we talk about industrialization? Well, South Africa is known as the most industrialized country in Africa. Are there lessons to learn from South Africa as it is?
Well, even before we go to South Africa, even though many African countries will say they need to learn from us, even within the ECOWAS today, we are still the one who's supposed to potentially lead in terms of manufacturing. Maybe we should also learn from our previous experience. I've told you in the 70s, 80s, Nigeria used to be a promising industrializing country. In fact, manufacturing value added was far more than China in the 70s, 80s. We're ahead of China. In Ikeja Industrial Estate, Aba Industrial Estate, Port Harcourt, Trans-Amadi Industrial Estate, Kaduna, Nasarawa, Bompai, in Kano. This was a huge industrial powerhouse. I think we should learn from our previous experience. And what was the miracle? Consistent industrial policy. There's complementarity between the monetary fiscal authorities. Exchange rate was very stable and the interest rate was virtually zero, single digit. So manufacturers can borrow money. Then later on, we had development institutions like NIDB, which became back of industry, which also supported the industry before. So we have enough from our experience to learn. But I agree with you, we can learn from South Africa more now. Even Rwanda, a small country that came out of a crisis in the 90s, is now manufacturing on a huge scale. Ethiopia, I've forgotten Chimeze. Ethiopia has become a huge industrial powerhouse. They produce a series of garment, textile products for big brands in the world. And they have employed hundreds of thousands of workers. I think Nigeria has done it before, we can do it again. And that's the way to go,
Let's hope we're able to do it again. Thank you very much, Mr. Remu, for your time.
Thank you.
Mr. Issa Aremu is the Vice President, Industrial Global Union. Still to come, commodities market update. Do stay with us. And for commodities market update, I'm being joined by Nosike Nwajide, one of the research analysts with Financial Derivatives Company. Good morning, Nosike. Thank you for joining us.
Good morning, Chimezi. Always my pleasure.
Well, ordinarily, by tomorrow, Nigerians should be paying more for electricity, but that seemed to have been moved till next year. But how welcoming is this move?
I think we keep kicking the can down the road. It's something that should have happened long before now. It was scheduled for March. It was moved down to 1st of July, and then now 2021. For the consumer, you would it's should I say the government is using it as some sort of palliative, given the context of the COVID-19 reduced incomes, some people out of work. So it's one way to put a bit more money in the pockets of people. As from a consumer standpoint, you would want increased power before you pay more. But from a supply standpoint, the supplier will tell you that increased price is the incentive for increased output. So, increased the plan was to increase the tariffs by about 100% in some places. So increased income for these discos will go a long way in improving their capacity and all whatnot. Some of them are still grappling with loans and, the issue of, what they call it, estimated billing, because we don't have metering issues, so to speak. So, the discos ordinarily will procure these meters, then install it in your households, but funding issues and all of that. So increased tariffs
even with the discos,
that problem.
Even with the discos, they were like, okay, that they are not even ready to take up for this tariff increment for July 1. Perhaps they've not been able to put a lot of things
in place.
Yes,
so they're still grappling with major issues. So if you take the current state of the industry and say, okay, you wanted to double power output, obviously you start from the generation companies, the transmission company, down to the distribution company. You would need to meter as many households as opposed to, getting estimated billing.
Which hasn't been done.
Which hasn't been done. That's a major constraint to collect their collections. And if they can sort that out between now and 2021, obviously then when they increase the tariffs, even if it's not 100% increase as they are expected to do, and if they can meter as many people as possible and able to get as much income as possible, then that gives them incentive to increase output, so to speak.
Okay, and another burning economic issue there is that FAN has raised airport taxes by 100%, and that will take effect from August. What will be the implication of this for air tickets and even for cargo?
Obviously, the immediate impact is an increase in the cost of air tickets, basically. FAN have said that the last time they increased this service charge was back in, I think, about 9 years ago in 2011. So it's long overdue, in my opinion. The increased, it's supposed to fund upgrades and improvements in airport infrastructure, improve the services, improve sanitation, improve a whole lot of things. So obviously the passengers will pay a bit more. For international flights, it goes from $50 to about $100. So that additional $50 on your tickets, some may frown at it, but if we can see these improvements and upgrades in infrastructure, then it's something that is welcome.
What about goods that are being cargoed?
Well, it's specifically for says passengers. So I don't know if it applies to cargoes, but obviously if it does, then we'll have increased transportation costs, so to speak. Okay.
Now, there's this back and forth thing on price control, or for the petrol pricing. What would be the implication if not properly handled? Because the PPRA seem to be insisting that they have to get hold of the price and keep controlling the price, but the marketers are saying it's not working. So does it mean that government is not even ready to do away with subsidy, even though they said they have already done that?
At the moment, it appears, as you have said, the PPRA have insisted that they would, give the pricing guidelines within which, a price range within which you will set your prices. A couple of months ago, or about a month ago, they deregulated the importation of PMS. So it wasn't just NNPC bringing it in. So if you have NNPC and other private marketers bringing it in, NNPC obviously will have the exchange rates at the official price, but the marketers, we don't know where they source their forex. So when you bring it in, I mean, what price do you set? What's the ex-depot price? You now get down to your pump price. The price modulation has been in place since March. They went down to 125, down to 123. So if oil prices rise, do we see a gradual, steady increase? And you would expect that for a deregulated market, prices would depend on the cost of the commodity overseas and the exchange rate. But now that you've set the price, those variables, they wouldn't matter as much. And it would create some sort of disincentive for private marketers.
So even now that they've been asked to, they can actually import their own product and not just NNPC importing. But that's, I mean, with the exchange rate thing that you have talked about, would they be able to now do that?
I mean, if you bring in your product at 450, 455, and the NNPC brings the product out 380, there's a huge disparity. You just can't compete. So your ex-depot price will be far higher than NNPC's, and everybody will simply buy from NNPC. So as long as that disparity exists, is a disincentive to the whole thing. So the ambiguity now is, okay, if oil prices rise back up to 50, 60, and obviously the price of imported price of PMS goes up, would we see a reintroduction of subsidy? The prices remain at 123, 124, 125. Do you go back to 145? A lot of questions that need to be answered. Right now, there's a lot of uncertainty, there's a lack of clarity, and it's a great disincentive for any investor in the sector.
The government, the PPRA is saying that the reason they would have to take hold of the price and keep controlling it is because they wouldn't want these marketers to exploit, the citizens or whoever.
Yes.
Does that really hold water?
I mean, for them, for the people, for the consumer, a lot of people might say, yes, it's the right thing for PPRA to do, because if you leave it to the marketers, they might increase prices, willingly, and it might get up to 170, 180. But as long as the price of crude oil is the major ingredient to the price of PMS, if that continues to rise, and if the ex-depot price continues to rise as well, do we get to a point where the government reintroduces subsidy when it's said that it's completely done away with the subsidy regime? So in that event, in the event that oil prices rise, you would see an increased price of PMS, whether we like it or not. So that you're protecting consumers from price gouging and all of that. Eventually, the chicken will come home to roost, and there's not much PPRA can do.
All right, let's look at the global oil market. Of course, investors are wary about the sharp spikes in new coronavirus infections around the world. Does that worry you too? And how much impact do you see that having on oil price? I mean, today we saw the price fall this morning.
The market is simply looking for things to galvanize, to boost its sentiment. Right now, the news of Libya that's adding to pressures. We've seen countries, lifting lockdowns. We're hearing of a resurgence in coronavirus cases, which might lead to another round of lockdowns. We would heavily hurt energy demand globally and depress prices. And if you add that to Libya, factor in Libya into the equation, that's beginning to paint a grim picture. So we might see by the end of the week, if things continue the way they have, keep seeing an increased number of cases, spike in number of cases in more advanced countries, the bigger consumers of crude oil, that we might see oil prices drop back to, say, 36, 37 by the end of the week.
Now, OPEC Plus supply cuts have been helping, keep oil prices afloat. In the next few days, we'll be getting some kind of data or clues on the June compliance.
Yes.
Now, those countries that were accused of not complying, are they complying now?
Yes, they have taken major steps to comply, Nigeria being one of them. Not just that they are now in compliance, they are where they were said to have cheated and supplied higher than they should have. They are taking extra steps to cut supply to account for the extra supply they had in the past. So I think it pays every member of OPEC and the OPEC Plus. They came together for a reason, and cheating does not help anyone at the moment. I mean, the Saudi Arabia is by far the biggest. If Saudi Arabia decides to cheat, then the whole agreement is scattered. So for the smaller, the Nigeria, Iraq, and other smaller producers, it makes sense that they fall in line, and we expect to see that by the time the data is released, that they've fallen well in line, and
Okay, now that we're seeing rising cases of COVID-19 and then the 9.7 million barrels per day, that, that was extended till July, do you see that? Do you see any further extension with this with the fear of this continuous rise in COVID-19?
I think it remains to be seen. We know that the fall in oil prices have crippled a lot of shale oil producers in the U.S. So U.S. oil output is a bit lower. So as the weeks go by, as we hear that cases are rising and we hear that countries are beginning to lock down again, that's when OPEC Plus might decide to take action. They'll basically wait and see and observe the markets and may call for an extraordinary meeting. And I don't know how much further some of the smaller OPEC nations may cut. So the big ones like Saudi Arabia may decide to, take the burden of increased output cuts on their shoulders and, just to balance things out at the moment.
All right, in all of these that we've talked about, what is the outlook for the domestic commodities markets?
Okay, we heard that there's an announcement of, the lifting of interstate movements. So commodity prices have been high because of this disruption to the commodity supply chain and logistics issues. So with that factor taken away, we expect prices to fall, to ease down slowly, not steep drops, but ease down slowly in the coming months of the year. So it's something that has added to food inflation in the last 3 months. So we expect food inflation to ease a little bit in the coming 2 to 3 months.
All right, thank you very much for your time, Nosike.
Always my pleasure.
Nosike Nwajide is one of the research analysts with Financial Derivatives Company. All right, let's still take a quick look at the global oil market. Prices fell as optimism for a straightforward recovery in fuel demand faded and a looming increase in supply weighed on the market, with Libya State Oil Company flagging progress on talks to resume exports. U.S. West Texas Intermediate crude futures fell as much as 44 cents, but recovered slightly after stronger than expected Chinese factory data. In early trade, they were down 26 cents at $39.44 a barrel, having jumped 3% on Monday. Brent crude futures for September fell 17 cents to $41.68 a barrel, powering Monday's 92-cent gain. The less active August contract, which expires today, fell 25 cents after gaining 69 cents on Monday. Optimism on Monday had been based on strong growth in U.S. pending home sales, bolstering belief that global fuel demand is rising steadily as major economies reopen after coronavirus lockdowns. But at the same time, coronavirus cases continue to rise in southern and southwestern U.S. states. Bulls will be looking for more signs of a demand recovery in data due today from the American Petroleum Institute Industry Group and from the U.S. government on Wednesday. On the supply side, investors are watching to see whether Libya, which can produce about 1% of global oil supply, is able to resume exports blockaded since January amid a civil war. Libya's National Oil Corporation said on Monday it was making progress in talks with neighboring countries to lift the blockade. And for review of Monday's trading activities at the equities market, we have Temple here. Temple, things changed, kind of.
Well, a lot is changing, actually. I mean, but
let's see how that is sustained.
Absolutely. We'll see how that is sustained. Yesterday was Nestle that really moved the market. Generally, we should say the consumer goods segment of the market. And that informs the 0.12% gain that we saw here. Yesterday alone, we saw that Nestle, which gained on Friday, also sustains that. Investors sustained their interest in this particular food giant and was able to increase their interest in it yesterday alone by some 4.73%. That's put together with what we got that's 9% from PZ and, of course, a couple of other food companies sustained the market yesterday, but we still remain just around the 13 trillion naira mark. We haven't really touched it in terms of the equity capitalization, but we do hope that before the week runs out, I'm not too sure of today, we should be able to get some kind of addition to the equity capitalization. But basically, if you look at the investor sentiment in the market as measured by the market breadth yesterday, it wasn't too good. It was really battered. 29 losers in the market, led by Unilever, which is also a food giant in the market. But basically, we saw a 25% increase in volume of transaction yesterday. Major contributor was the bank, GT Bank, where we saw some sell down yesterday, 1.54%. It depends on what you're doing actually with that particular stock, because yesterday alone, we know that some people sold their GT Bank and were able to make some profits, because again, there are folks that had actually bought this particular company at about 17, 18 naira, and now that it is more than 20 naira, it's an opportunity for you to actually take profit. So 18 million units of GT Bank yesterday, add to what we had in terms of volume, and of course 401 billion naira in terms of the value of the transaction yesterday. That was the major top trade that we have in the market yesterday. If you look at other sectors, other banks yesterday, Wema Bank 5% was down yesterday. Sterling Bank was also down yesterday, and that informed all of what we saw here yesterday, in spite of the fact that FBN Holding, your toast in the market, was actually positive yesterday. Consumer goods side of the markets, Nestle, PZ, a couple of other companies there did so well for that segment yesterday. Industrial goods side of the market, we saw some 1.8% decline in WAPCO yesterday, and that impacted what we saw in terms of industrial goods sector performance. Look at the insurance side of the market. Regency Alliance was up yesterday by 10%, just like other companies that joined to rise actually by 10% yesterday. And if you look at what Name Insurance did with some 3%, contributed to what we have here, as well as WAPIC, which has been very, very helpful to a lot of policyholders lately. Oil and gas side of the market, which takes us to the energy side of the market. Investors looked at Ardova yesterday. That's your former Forte Oil PLC. For those that actually purchased it at some 30-something naira at about this time last year, I mean, this is no good news for you at this point in time. Look at other segments of the energy stocks that we track. Etona PLC was down by 9.68% yesterday. And of course, in spite of some 70-something million naira or thereabouts declared in turnover for Japol recently for the Q1 2020, not impressive enough for investors to bet more on Japol PLC yesterday. I think we have Mr. Tajuddin Olayinka, a stock trader with Valmont Securities, joining us via phone now. Good morning, Mr. Olayinka. I mean, let's look at the fact that there's so much of negative stories out there, and that's not good news for the market. But how did we get this bargain hunting that we saw in the market yesterday? Is that really sustainable as well?
Well, thank you, Temple. I would say that the negative story is not completely negative, because it's just what market is anticipating. But the truth is that the market is still waiting for the right information. That new information that will move the market, that will make investors to take position. So what happened yesterday was that most investors and players in the market did not see anything completely different from the information they currently have. Not until they have the new information, they are not likely to change their position on the state of the market. So basically, you will still see more of bargain hunting going on in the market until the new information emerge. But the truth is also that this new information that the market is expecting may not be completely different from what they used to see in the past, even though, yes, there are issues. But some of those issues have been addressed at different levels of government, both local government, both Nigerian government and foreign government. So when you look at all those, when you put everything together, you see clearly that yes, market may not be able to move for now, but there will still be more bargain hunting until that new information emerge, and that new information is basically about about quarter two ending.
And bargain hunting.
So by the time that information comes out, you see, we basically see a better market. So for now, market is still waiting for that information. And what this market said was most investors did not see anything significantly different from the information they are expecting with the one they currently have. So that's that's the issue.
Okay. Thank you so much, Mr. Tajuddin Olayinka. I hope you will be willing to share this very much expected market information you're waiting for with our viewers. I mean, when the time comes. I know that we're stepping into Q3 now, and very soon folks will be watching out for Q2 2020 numbers. I mean, as they continue to take stock for the first half of the year. Mr. Tajuddin Olayinka, stock trader with Valmont Securities, thank you for sharing your thoughts with us on the program this morning. Back to you, Chimezie.
Thank you, Temple. And we'll take a quick break, and when we come back, we'll do an opening call to London, as well as come back to you for the debt and currency market update. Well, just before we move over to London, let's quickly take a peep into the debt and currency markets. Temple.
Great. So before we go to the debt and currency market, I always love to talk about the unlisted securities market, which is the NASDO, to say, check out what they've done. I mean, 715.51 points yesterday. That's a 1.78% gain. I mean, that tells you whenever there's some kind of sell-off, lackluster performance at the equity side of the market, the stock exchange, investors are fond of looking at this direction because if you recall, at this point, there are so many low prices, and this is what we saw yesterday. Look at the market capitalization now at 525 billion naira compared to what they did in the previous trading session. I mean, if you look at if you also look at the performance in terms of volume of transaction was really positive. Volume was higher by some 57% yesterday alone, 65,222. WAMCO, which is your regular milk, stable, the staple food that you take regularly, accounted for more than 50%, 50,000 actually. The CSC as a depository of the capital market also contributed massively to this. I think CSC has actually opened at 13 naira 5 kobo and closed at 13 naira 95 kobo eventually, while WAMCO opened at 120 naira and closed at 124 naira plus yesterday in the market. Straight to the debt and currency side of the market. Now look at the bond side of the market. I mean, yesterday not so much of activities because again the system liquidity is really tight, and we did some 57,000. Investors were really more interested at the belly and of course at the tail end of the curve. That's the mid and the longer end of the curve. I mean, look at the 2049 paper where we saw a bit of offers yesterday, and of course the 2029 security, which is at the mid end of the curve. The 2050 paper also experienced a little bit of offers yesterday compared to what we did in the previous trading session. Look at the NTB side of the market, not so much of activity. Folks gave so much of cold shoulder to this segment of the market yesterday. 3 deals here, 3 deals here, 750 million, very retail transaction at this end of the market yesterday for just 1.5 billion naira. Let's look at the open market operations maturities here. I mean, here, the 2021 paper, we saw some offers yesterday which closed at 5.50%. At some point, it was even 4 point something percent in terms of the offerings that we got yesterday at that side of the market. Other ends of the market, the October paper, which is at the mid end of the curve, that also came in at some 5.5%. And that's all of what you're saying at this end of the market explains the tight system liquidity. But folks are really waiting this week, later this week, for some kind of maturities that will come into the system in terms of NTB, with they're expecting some 80-something billion naira, and of course 157 billion naira anticipation in terms of maturities around the OMO maturities. But we have Ramat Baba, who is the chief dealer for fixed income at FBN Quest Merchant Bank, joining us via phone. Ramat, thank you for your time. I mean, how have you been coping lately with this tight system liquidity, and what's the outlook for the day?
Good morning.
Good morning.
Liquidity remains tight. Rates have been really high in the morning market, trading above 14.5%. That's the CBN lending rate. I think most banks have just been trying to manage their liquidity on a daily basis.
Right. So in terms of market rates, I mean, how low do you see market rates going by the time the maturities that you're expecting, the inflows that you're expecting this week set in?
Okay, so for the month of July, volume maturing remains low compared to prior months. So we don't, and of course the CBN will continue to, FX will continue to be sold. They'll continue to sell the retail and wholesale SMIs. So we actually do not expect rates to drop to probably 2% levels like we've seen in the last 2-3 weeks. We actually expect rates to ease up a bit, but probably to about 8-9% levels.
Wow. Okay, so Ramat, permit me to get more forward looking with you. I mean, tomorrow we're stepping into July, and that launches us into Q3. I mean, any heads up you've got now around what the DMO will be raising and how folks like you are bracing up for that?
No, the issue calendar for Q3 hasn't been released yet. We expect that to be released probably in another 2 weeks. So the release of that calendar should actually set direction for the market.
Okay, so talking about direction, how positive are you about returns at this point in time? Yes, we know that the system liquidity is something that has been really, really challenged lately. But how positive or how optimistic are you about Q3?
Okay, so generally, we expect yields to remain low, especially in the fixed income market. Yields in treasury bills have been really, really low. And for bonds, we continue seeing market trading even lower. The 30-year bond is currently trading below 11%, which is a surprise to most people. But even at that level, we still see demand coming in. The 2035 bond is already below 10% at 9% levels. So to be honest, demand keeps filtering in, and as long as those demand continue coming in, we expect yields to still continue going lower. At some point, there might be some reversal, probably if there's profit taken by a few investors, because a lot of people consider this an anomaly, and people are beginning to get jittery. So I think people are just on the watch for certain levels for them to take profit on positions held.
Ramat, I'm loving this conversation with you, but just before I let you go, let's go back to the bond side of the market. For 4 out of the 5 trading days last week, we saw so much of profits taken at the bonds end of the market. Exactly what fuels that, and what has changed for this week? When is that likely to bottom out? Is it that there's been so much of profits taken at this point as well?
No, there's still people buying. There's demand coming in. Yields keep breaking new lows, to be honest. Right. Yesterday, like I said, we saw the 2049 bond. We saw the 30-year bond break the 11% level. Mm-hmm. Everybody expected that at some point there should be a reversal, but that hasn't happened. So while I know a lot of people are just on the sideline, hoping to probably sell off at certain levels so they can just take their profit and move on, there's still demand coming in from a few PFAs and some other investors.
Okay.
So nobody really knows when that reversal is going to happen.
Right. Rama, this will be my last question to you. We all know that the federal government has a lot to actually raise in terms of borrowing for this period, for the year 2020, when you price in the 2020 budget. But how responsive has the government, especially the DMO now, how responsive have they been to your demands in terms of rates when it comes to all of those borrowings in the past few calendars and, of course, auctions that they've done?
Okay, so in the month of May, the DMO was supposed to raise 60 million at the bond auction. Almost 300 billion was sold. So clearly, an excess of almost 250 billion was raised. Looking into the Sukuk, 150 billion was on offer. The issue was oversubscribed by over 400%. Hence, that means subscription was about 669 billion. However, just 162 billion was sold.
Right.
So clearly, the GMO still kept to the issuance calendar or the plan of raising about 150 billion. Looking at June, 150 billion was supposed to be raised at the June bond auction. Less than that was sold, which was actually why we saw yields coming lower, because the GMO did not sell. So everybody is actually eager to see what the issuance calendar is going to be for Q3. So like I said earlier, the release of the issuance calendar for Q3 is actually going to set a direction for the market. Because if the amount being raised is going to be into the Q3 calendar and much more will be raised, that means we'll probably see those going slightly higher. But if that is not
that's something
case,
that we will certainly continue to track.
The current situation might just continue to persist.
Thank you so much, Ramat Baba, Chief Dealer, Fixed Income at FBN Quest Merchant Bank. I appreciate your insights there. And, of course, all of those review from the month of May, June that you've actually given us. I appreciate them. Thank you so much. Chimbizes, back to you.
Thank you very much, Tempo. Well, let's continue to track those numbers and keep being optimistic. It's on that note that we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimezie Obi Iwagu.